Good day, everyone. Thanks for joining us here in the charge. Tune into the Crypto Flight Edition. Napoleon macro speaking. Looks like Dogecoin may experience some pressure to the downside. I want to go over this. We promised that I'll send you out a video saying that there's a potential retracement looming in the market. I'm going to explain to you why I say that and break it down as simple as I possibly can. Welcome back, loyal family. We're going to get into this. And if you're new here, please take a moment to do any research outside of the price action that you need to do. That includes whale wallets, China banning crypto, and blah, blah, blah. With all due respect, do that, come back, welcome back. And let's go ahead and dive right into the charts here. Sure. All right, so today's May the 25th, 2021, and the current price of Dogecoin is going to be 35 cents. It's up approximately 2.4% for the day. Okay. All right, welcome back, everyone. ASMR, interesting analysis. So this is probably going to be a little bit of a lengthy video. I want to spend some time to explain to you all why I say that Dogecoin may experience a substantial retracement. So here's where we are going to start first. We're not going to go over any dates. Just kind of stick with me here and understand that this is buyers and sellers that we are paying attention to. Here it is. Okay, so ladies and gentlemen, what you are witnessing on the screen is the buyer's accumulation range just overhead in the top area here. And of course, just below the price activity is going to be the seller's accumulation range. Okay. Now, also something that's noteworthy is the PRL. This is the previous resistance level. It is very important, this little white horizontal line here, because as we do our two other examples, you notice that in this example that we're looking at, this is the healthy move up as Dogecoin is in an uptrend, thrusting and easing to the down upside. Okay, the market moved up, and ever since it found support within the buyer's accumulation range, it had a very healthy move, consolidating sideways, and this obviously resulted in a very aggressive breakout to the upside. Okay, this is important. Just kind of keep this in mind. The only thing that you're really keeping in mind is that for the healthy case scenario, the buyer's accumulation or the price activity took place in the buyer's accumulation range, and it never really went down in the seller's accumulation range for this example, at least. Okay, so again, we're going to show you two more examples. Now, first, let's go back. I think it was back in 2013, if I'm not mistaken, 2018. If that's, yeah, guys, my eyes are horrific. Hang on. Okay, yeah, 2018, it looks like. The price activity took place, and notice it's kind of the same thing here. There's actually four parts. I'm going to get into all that. We're going to pull up the RSI as well. So here's the same example. Now, this represents a very substantial retracement, okay, back in 2018. This is like kind of the January area. The market went up in the went into the buyer's accumulation range, and it got rejected back within the seller's accumulation range. Now, one may ask, okay, how do I find the seller's accumulation range just below the price? Well, it's pretty simple, actually. The PRL, the previous resistance level. If the market is, in my book, remember, guys, very, very minimal experience here, okay, 3 years. If the market is in an uptrend and it's going up, in most cases, if the market is healthy in a healthy uptrend, the price activity takes place above the PRL, the previous level of resistance. Let's just put a quick horizontal line right about there. I think you guys get it, but I just want to show you right there. It typically takes place and it stays above the PRL, the previous level of resistance, aka the buyer's accumulation range. Assuming that everything is healthy and intact, it will stay above that PRL level. But in this case, that's how I found it, right? The price activity that's below the previous resistance level, okay, which is anything within this rectangular red range down here, okay? So let's go ahead and pull up the RSI, and I want to go through 1 through 4 and show you why I'm saying that what is taking place present day is potentially a sign that the market may experience a 90% retracement, as this example that we are looking at right now, from the highs or the, a penny back when it had the retracement, it went all the way down, obviously sub 1 penny, and the total retracement was like 92% to the downside. Okay, but let's just go through the 1 through 4 to just kind of paint this picture as clear as I possibly can, so we all understand that we are comparing this 90% correction to present day, and to see if it, if it makes sense to everyone. So number one, the first thing that we're going to look for in present day is a bearish divergence. So if we just kind of zoom in here on the RSI, you'll notice that number one represents a bearish divergence. If you're new, I'll explain what it means. Okay. So the bearish divergence, so obviously this number one here. Okay. So the bearish divergence is very simple. When the RSI is making a high and then a lower high, and in the price action is doing the opposite, a high and then a higher high, this is an indication that there is more selling going on than buying, and it creates an RSI, kind of like a lagging/leading indicator that the markets may not have a sufficient amount of buying interest. Okay, so hopefully you guys caught that with the bearish divergence in comparison to the RSI, a high, a lower high, and of course a price action, a high and a higher high. That's the first sign, the warning sign. Number two, the price activity breaks down below the buyer's accumulation range and also below, well, the same thing, guys, the PRL. So the represented number two here, after the market moves up within the buyer's accumulation range, it immediately breaks back down in the seller's accumulation range. That's number two that we're going to look for in present day. Number three is the RSI just kind of breaks down and it kind of does some coiling near the white line, which is the 41 level, which is kind of represented here in this purple circle. That's the third thing that we're going to look for over in present day to see if we compare apples to apples. Number three, RSI goes all the way down to 41 and starts to coil up near that 41 level. Number four, and the official sign, it's kind of two things, but let's just stick to what we're looking at here. These are daily candles, and the number four sign would for it to break down below the seller's accumulation range, kind of this floor right here. So that's what we are looking for as we scroll on over to present day to see again if we are comparing apples to apples. So in summary, before we go over there, we're looking for a bearish divergence, number one. Number two is price activity in the seller's accumulation range. Number three, the RSI coiling near the 41 level on the RSI on the daily. And number four, we get the official breakdown below the seller's accumulation range. Let's scroll on over to present day to see what we have, see if we can compare apples to apples. So the first thing is number one, we are looking for a bearish divergence. If you notice here, we got a high in the RSI and a lower high in the RSI. Correspond that with the price and you'll get a high and a higher high in the price action. That is an indication that there may be more selling than buying in this area. Now, number two is what we're looking for is the market to break down below the buyer's accumulation range and the price activity to take place within the seller's accumulation range. So that is number two. It's an interesting sign. I'm going to say it's a warning sign, okay, for number two. Number three is the RSI coiling near the 41 level. If you see in this little purple circle here, it appears that the RSI is coiling. Is it guaranteed to break down below the 41 as it did in the past? Nope. But does it have the potential? Yes. And it can also bounce from this level, guys. Remember, I'm just kind of going by what has taken place in the past that could potentially take place next again, but it's not guaranteed. So I think we have 1, 2, and 3 verified. The bearish divergence, price activity taking place in the seller's accumulation range. Again, we found that because the market's previous resistance level, which is right here, the price activity is currently taking place within the seller's accumulation range, and it broke down below the buyer's accumulation range just over the price action here. Okay, so the last thing that the market is missing is the actual breakdown below the seller's accumulation range, which that level can be, if you take notes, at 24.1. Okay, so 0.241, it's gonna be like 24 cents. So that's the reason that, and if the market does break below and stay below that 24-cent level, then I'm going to speculatively say that the market could experience a 92% retracement, guys. Okay, Dogecoin Army, take it easy, put those weapons away. Okay, don't point those weapons at me. I'm just the messenger. Okay, if the market does experience a 92% retracement, that will leave the price activity going as low as 5 cents. I know, guys, I hope I'm wrong about this. This is pure speculation, not financial advice. This means that you need to execute your strategy. And again, don't take this as a video saying that Dogecoin is going to experience a 92% retracement. Okay, there's only one thing that you're looking for if it's actually going to happen. If the market breaks below and it stays below, it breaks like a daily candle's body below the 24-cent level, then just understand that the market has potential to do what it took place in the past. That's it. So that's all I have. And hopefully this does not come to fruition. So let's just wait and see how this plays out. If I have to put a time on it, let's give it another 30 to 60 days. If the market is staying above this $23 or $24 level, technically speaking, the market is simply in preparation to move higher. Because if we just kind of take this from a very practical standpoint, if you notice, this is a higher low, and this clustered area of price activity currently, assuming that it won't go lower, is another higher low. So the buyer's obligation at a very minimum is to, as we went on the same video as on the previous video, the market at a very minimum needs to get above the 55-cent level. It really needs to make an all-time high, but the previous level of resistance, that's all we go over on the channel, is 57 cents. Yeah, it's like, 55 cents. At a very minimum, it must kind of coil here. And I think we also got a question is how long should it take for it to stay above that 27-cent level? See if we can get a quick date for you all. Let's just give it like 2 weeks, guys, up to 2 weeks. If it's been in more than 2 weeks down here below this level, then I would start to raise an eyebrow, because it's going to start showing a sign of weakness. So 2 weeks would lead on over to June the 2nd. So hopefully by June the 2nd, the market would be back above this previous resistance level, which is currently at like 41 cents. I'm throwing so many numbers out there. And in summary here, in terms of the potential bearish case scenario, 92% retracement to the downside, only one level, guys. 24 cents, 0.241 on this Bitrix chart. And that's pretty much all I have. So hopefully this makes sense in terms of why I say that Dogecoin has the potential to retrace 92%. That all the evidence is there, guys. 1 through 3. There's only one thing left for this market to do in order for it to show that sign that the bearish potential or the bearish scenario could play out in the market. So hopefully that was a pretty straightforward, condensed explanation for everyone to understand. And that's pretty much all I had. So I took some time to put this together for you all. So hopefully you appreciate that. So leave an appropriate thumb just below the video if you enjoyed the content. Also leave a comment so that the YouTube algorithm can perhaps get this video out there to some who just need a little bit more of information in terms of for the Dogecoin price activity. Yeah, so that's all I have for you guys. Also, if you're new, before you go there, we cover traditional stocks if you're into that 7 days a week. So kindly join us here on this interesting journey. We'll send you that information when it is available. Thank you and welcome in. Once again, thanks for stopping out. Take care of yourselves. Be sure to tune in till our next Dogecoin update and execute your strategies out there, of course. We'll talk soon, and bye for now.